Ever found yourself staring at a sea of crypto exchanges, wondering which one will truly navigate you to trading success without swallowing your profits whole in fees? You're not alone. The battle for the best crypto trading platform is fierce, with giants like Kraken and OKX constantly vying for your attention and, more importantly, your trades. But beyond the hype and flashy interfaces, which platform truly equips you with the superior trading tools and the most competitive fees? That's the million-dollar question we're diving deep into today. Forget the generic introductions. Let's get straight to the heart of what matters most to you, making informed decisions that impact your bottom line. We're not just scratching the surface here. We're going to dissect the core trading functionalities, the intricate fee structures, and the subtle nuances that can make or break your trading experience on Kraken and OKX. Before we pit these two titans against each other, let's briefly acknowledge why choosing the right exchange is paramount. It's not just about buying and selling digital assets. It's about accessing the right tools to analyze market trends, execute trades efficiently, manage risk effectively, and ultimately, achieve your financial goals in the volatile world of cryptocurrency. The fees you incur on each trade directly impact your profitability, and the availability of specific trading tools can significantly influence your trading strategies. Now, let's set the stage by introducing our contenders. Kraken has established itself as a reputable and long-standing exchange, known for its security measures, a wide range of supported cryptocurrencies, and a diverse suite of trading options catering to both beginners and seasoned traders. It boasts a strong regulatory compliance track record and has built a loyal user base over the years. OKX, on the other hand, has rapidly grown into a major global exchange, offering an extensive array of services beyond spot trading, including derivatives, margin trading, and various earning opportunities. It's often recognized for its competitive fees and a robust platform packed with advanced trading features. So, the stage is set. It's Kraken versus OKX. Let's delve into the crucial aspects, trading tools and fees. First up, spot trading interface and tools. Both Kraken and OKX offer user-friendly interfaces for spot trading, allowing you to buy and sell cryptocurrencies at the current market price. However, the depth and sophistication of their tools differ. Kraken provides a clean and intuitive interface, especially for beginners. It offers various order types, including market, limit, stop-loss, and take-profit orders. Its charting tools, powered by TradingView, are comprehensive, allowing users to conduct technical analysis with a wide array of indicators and drawing tools. Kraken also provides depth charts, showing the order book in real time, which is crucial for understanding market sentiment and potential price movements. OKX also offers a clean and customizable spot trading interface. It goes a step further by providing more advanced order types, such as trailing stop orders, iceberg orders, and TWAP, time-weighted average price, orders, catering to more sophisticated trading strategies. Its charting capabilities are also powered by TradingView and are equally robust. Additionally, OKX provides more granular control over order execution and offers a detailed view of the order book with various visualization options. Margin trading and leverage. For traders looking to amplify their potential gains and losses, margin trading allows borrowing funds to trade with more capital than they possess. Both Kraken and OKX offer margin trading, but the available leverage and associated fees differ. Kraken offers margin trading with leverage of up to 5x on select trading pairs. The margin interest rates vary depending on the asset and the amount borrowed. Kraken employs a tiered fee structure for margin trading, taking into account the volume and the currency pair. OKX provides significantly higher leverage, reaching up to 10x on certain assets. This higher leverage can lead to substantial profits but also carries a proportionally higher risk. OKX also has a tiered interest rate structure for margin loans, which can be influenced by factors like the borrowed asset and the loan duration. Furthermore, OKX offers isolated and cross-margin modes, providing traders with more flexibility in managing their risk. Derivatives trading, futures, and options. For advanced traders seeking to speculate on price movements or hedge their portfolios, derivatives trading is essential. Both Kraken and OKX offer futures and options contracts, but their offerings vary in terms of the number of available contracts, leverage, and fees. Kraken offers futures contracts with leverage of up to 50x on a limited selection of cryptocurrencies. Its futures trading interface is relatively straightforward. The fees for futures trading on Kraken are tiered based on the trader's 30-day volume. OKX boasts a much wider range of futures contracts with higher leverage, going up to 125x on some pairs. It also offers a comprehensive suite of options contracts, providing more sophisticated trading strategies. The OKX derivatives trading platform is feature-rich, with advanced order types and risk management tools. Their fee structure for derivatives is also tiered and generally considered competitive. Staking and earning opportunities. While not directly trading tools, staking and earning features can influence where traders choose to keep their assets. Both platforms offer ways to earn passive income on your cryptocurrency holdings. Kraken offers staking for a decent selection of proof-of-stake cryptocurrencies, with varying APYs, annual percentage yields, depending on the asset and lockup period. They also provide other earning opportunities like yield farming and access to initial staking offerings. OKX has a more extensive range of earning products under its Grow section, including staking, lending, and various DeFi, decentralized finance, products. Their APYs can be quite competitive, and they often feature limited-time high-yield opportunities. Now, let's move on to the all-important aspect, fees. This is where the rubber meets the road, as fees directly impact your profitability. Spot trading fees. Both Kraken and OKX employ a tiered fee structure for spot trading, meaning the more you trade, the lower the fees you pay. These tiers are typically based on your 30-day trading volume. Kraken spot trading fees follow a maker-taker model. Makers are traders who add liquidity to the order book by placing limit orders that are not immediately filled. Takers are traders who remove liquidity by placing market orders that are executed instantly. Kraken's fees generally start at around 0.16% for makers and 0.26% for takers at the lowest volume tier and decrease as your trading volume increases. OKX also uses a maker-taker fee model for spot trading. Their starting fees are generally lower than Kraken's, often around 0.08% for makers and 0.1% for takers at the lowest volume tier. Similar to Kraken, these fees decrease with higher trading volumes. This can be a significant advantage for active spot traders. Margin trading fees. As mentioned earlier, margin trading involves borrowing funds, which incurs interest. With that said, thanks for watching and until next time.